Good afternoon. We are live from Marrakesh, Morocco, and good morning in Washington, D.C. We're here at the IMF-World Bank annual meetings, the first annual meetings on the African continent in 50 years. I'm Josh Lipsky, Senior Director of the Atlantic Council's Geoeconomic Center. We are going to bring you throughout the course of this week analysis, research, reports, interviews with finance ministers, central bank governors from around the world, and take you inside the meetings. This is a resilient Morocco that we have come to. An earthquake struck Marrakesh just several weeks ago, but the meetings are on. Thousands have come to Morocco, and you see everywhere you go the people excited to host, excited to show that their country is ready to do this. 5 years in the making, these meetings have been, but they face significant global headwinds around the world at what's happening. War in Europe, just this past week, war breaking out in Israel, an economy that's still trying to recover from COVID-19 pandemic, surging inflation, debt issues, climate action. We are going to get into all of these. I have our fantastic senior fellows who will be with us throughout the week. Our goal this afternoon is just bring you the previews, give you a taste of what's going to happen over the coming days. I want to turn first to Martin Mulheisen, senior fellow at the Atlantic Council, former director of strategy, policy, and review at the IMF. We have Hung Tran, former deputy director at the IMF and senior fellow at the Atlantic Council, and Nicole Colden, senior fellow at the Atlantic Council, global head of inclusive economic growth at Apt Associates. Nicole, Hung, Martin, thank you for joining us this afternoon. Thank you for coming to Morocco, and thank you for all you've done intellectually to support the thought leadership that has brought us to this moment. We have new research out today from several of our fellows that we'll share with everyone who's watching. Martin, I'm going to turn to you first. Your big themes to watch for in the coming days.
Thanks, Josh. Well, first of all, a compliment to the Moroccan authorities. I think they've put up a beautiful meeting site here, partly outdoors, as you can see, and partly, luckily for us, also climatized indoors. But it's very nice, and it gives a feeling of the local spirit, the local culture in the desert. Really enjoyable. The four big themes for me, you mentioned already the risks. I don't think we've seen such a accumulation of risks to an already kind of weak outlook when we're heading into a recession that may have been soft. As people talk about a soft landing, it may now be harder. There's the issue of global fragmentation and all the downsides from the de-risking, as some people say. There's the debt dynamics, both public and private, that could give rise to some unexpected or unknown financial vulnerabilities. There is also, one has to say, political dysfunction right now in the US that has triggered partly that increase in yields because people just don't know what to expect from the US Congress. And so we're really having a bunch of worries that we'll hear more about in the WEO and in the discussions here. The second one, the big theme is going to be financing for development and climate. There's huge expectations that there's going to be agreement on the financing model of the multilateral development banks. And personally, I would expect some agreement. Whether it's really living up to the expectations, we'll have to see. But it's going to be a challenge also for the new World Bank head, Jay Banga, to deliver on that one. The third one is almost perennial now, the issue of debt and how to deal with it, especially for emerging market and developing countries. I don't expect much to happen here. There will be the usual kind of verbal sparring between China and the rest of it. The issue may be that if there's an agreement on MDBs, that China may relent to some extent, because MDB reform has been part of the quid pro quo that China has been asking for. So we'll have to watch the G20 communique here. And lastly, on IMF governance and IMF quota, the proposal by Jay Shambo to go for a proportional quota increase may run into some resistance, given the need also to update governance structures. One aspect that's a little bit less in the press lately is that the current managing director has 1 year more in her term, and there may be some jockeying going on between her and the World Bank on who has the leading messages here, and also there may already be talks about extension of her contract, or whether Europe will have to look for a new MD at some point.
Martin, thank you. Great way to start us off. And on the SDR point and on quotas, I think the word to look for is equa-proportional. We'll talk what that means, but this is going to be one of the words of the week when it comes to quotas. We'll get into it. Hung, over to you.
Yes, thank you very much, George, for your introduction. My pleasure to be here. I also have 4 key themes following what Martin has said, but from a different angle. Number 1, given the accumulated risks and weaknesses that we have seen, the question mark is tomorrow with the WIO and the GFSR, when they unveil it, will they fully taking this latest development into consideration in assessing future growth? My own suspicion is that they may be late and therefore may not be able to incorporating the latest development in their forecast and assessment, because these WIO takes months going through different departmental review and management approval before they are published. By the time they are printed, they are already way behind market reality. So number 1 to watch for is whether or not they underestimate again potential weakness going forward. Number 2, in terms of the reform of the multilateral development banks to raise financing for climate change, I put more emphasis on how Ajay Banga can really be more aggressive in asking key governments to really increase their contribution, capital increases to the World Bank, not just going through accounting changes, optimizing the balance sheet to free up more money to lend. That is the easy part. That should have been done years ago, but probably will done this time. But more importantly, more higher capital contribution and more generous contribution to the International Development Association so that they can make grants and low interest loan to poor countries. Number 3, debt restructuring. I think that it gets to a point where we really have to call a spade a spade. The problem with the delay and difficulty and lack of transparency in sovereign debt restructuring lies squarely with one country, and that is China. Yeah. And at the moment, Sri Lanka is fulfilling all the requirements for the IMF program in the second review to release money for the poor country. But the IMF requires the bilateral creditors to the country, to Sri Lanka, to agree on a debt restructuring plan. Everyone agreed except one, China. And I think that the international community here really should put the spotlight on China and put pressure on them to cooperate and to help alleviate the problem of the poor countries. And last but not least, the so-called equi-proportional quota increase may or may not be passed. But whatever the demand by the country in the global south going forward will be consistent, will be stronger, will be more coherent in terms of really changing the share of votes in the institution to be commensurate with the increased weight of the global south in the global economy.
Hung, thank you, and I thank you for bringing up in your intro China. It's going to be a theme, of course, across the week, and we have new research on touching these issues from you today, and Martin as well, and several others. And this is one of the key things. We're waiting. We have the Zambian finance minister tomorrow. People should tune in. That'll be noon in Moroccan time, and we'll ask him these questions, specifically about debt restructuring and whether or not there will be this memorandum of understanding that we're expecting this week. So we'll come back to it. Nicole, over to you.
Great, thank you so much. It's really great to be here, great to be with everyone. And looking at some of the similar issues that Martin and Hung have raised, but from a different angle, as well as bringing in the development economist side, having worked with the World Bank maybe a little more closely. I start with the timing. You mentioned, of course, being in Morocco just several weeks after the earthquake, but I also think about it in the more macro sense of timing. We're coming just from really a few weeks from UNGA, the UN General Assembly, where the big focus was being halfway towards the Sustainable Development Goals. And I think a lot of that emphasis will continue to go here. And we're also sandwiched between UNGA and COP, which brings up, of course, climate change. And I think, as Hung mentioned, that link between the climate finance and the development finance, the fact that they go together, and bringing in the conflict lens that you mentioned, Josh, as we're seeing increased conflict around the world and what that means, and that fragility, and bringing that lens into it. So I think these really come together to bring out this sort of overarching theme of timing as well as resilience. I think that is a theme of not only the resilience of the Moroccan people, that we are here and their warmth and hospitality kind of shines through already, as we're seeing, just a day on the ground. But I think the resilience, whether that relates to climate resilience and adaptation, and what that looks like. So that's one of the sort of themes, as especially it relates to timing. One of the other themes, again, going back to the SDGs, but more broadly, is one of the World Bank goals of reducing poverty. And I think that theme will tie into inequality and how much we see that conversation as it relates to the inclusive growth. We've talked before about you can't have inclusive growth if you don't have inclusive governance. Yep. So as we see the World Bank evolution, as we see the new roadmap, as we see some of these IMF reforms and quotas and shareholders coming through, what does that look like? How does that translate into whether it's new voices and different governance within the system, as well as how we're bringing in and the role of the private sector and civil society, which relates to, yes, this is Ajay Banga's first show, so to speak, first big show, and it'll be interesting, and I'm watching for what that means and how his leadership in terms of governance, but also the expectations are really high in terms of what he will do with the private sector and his ability coming from the private sector to really leverage and mobilize private finance and bring out some of these new models of hybrid finance as it relates to both the public and the private sector. It's going to be needed. We know even with some of the new provisions from the proposals from the World Bank side, from the IMF side, and capital adequacy and what have you, it's not going to be enough. Yeah. So I think these are all really related, they're interrelated. And on the poverty side and on the inequality, one thing that I'm also watching for, which I haven't seen necessarily as much in the press, is when we think about the emerging economies as well as the advanced economies, we're seeing the debt as well as inflation that is starting to cool but hasn't fully subsided in many places, and that really affects people differently. And it's been exacerbating some of the inequality that we've seen that came out of the pandemic, and that resonates not only in the developing countries and the emerging markets, but also in some of the advanced economies. And I know we'll be having a number of conversations with some of the foreign ministers from the advanced economies, and I think that's an aspect of that conversation that we haven't really heard enough about. Yeah. How are we thinking about that, and how are we thinking about inclusive growth? So those are a few of the things on my mind.
Nicole, thank you, and I'm glad you raised that point because I think you've heard it a little bit in Kristalina's curtain raiser. Yeah. I think you'll hear it from Ajay Banga too. Divergent, not just divergent growth, but divergent inflation situations, divergent macroeconomic trends within countries that make the idea of coordinated action at something like the IMF World Bank meetings that much more difficult than it already is.
Absolutely.
Also divergent in suffering, because all the global shocks since 2020 until now, the IMF has estimated to be costing about $3.7 trillion, but distributed extremely unevenly, mostly on the shoulders of the poor country, with the US being the only country now able to get above the GDP level before COVID hit. So that is a big heritage.
Yeah, the U.S. is the only advanced economy back to pre-pandemic GDP growth.
The only economy.
Only important point.
But just quickly on your point, not only does it make it difficult, the sort of divergent impacts of inflation and the divergent sort of macroeconomic situation make it difficult for countries to kind of come together in a platform and coordinate, but even within their own countries, right? It can make it...
As Martin pointed out, just from a U.S. perspective.
As Martin pointed out, just from the U.S. perspective, right? Yeah. And so I think that's going to be interesting to watch and see what happens.
Well, Martin, let me come to you on that point because, okay, you brought up political issues in the U.S. We have talked sort of obliquely about quotas and the IMF. Let's just explain what the issue is, what we mean when we're talking about the quadrennial review, what the U.S. wants out of these meetings when it comes to this review process and re-upping of quotas.
So the quota structure, or as people in financial terms would say, the capital structure of the IMF is a bit complicated because weights and votes in the IMF are associated with the size of an economy, with its role in global exchange markets, I should say, and global trade. So the US has a vote of about 16%, which is gives it a veto de facto, because most important IMF decisions require 85%. The the way of allocating those quotas dates back many, many decades, and what happened is that although there are updates in principle every 5 years, it has not really kept up with developments in the global economy. So mostly China is hugely undervalued when it comes to
And this
votes
is their major complaint.
in the IMF. Yes. But I mean, one has to kind of fairly accept, I think, that it's more than just China. It's many emerging markets that feel that they not really have the vote. And it's also reflected at the composition of the executive board and the like. So I would not expect this idea of just an increase in overall capital to go down without a big fight about can't we really reallocate some votes. In fact, it may not actually pass. They are under pressure a little bit because there's a deadline by the end of the year to conclude this latest 5-year review of the quota structure. But if there's no agreement, as has been in the past, sometimes it may just get kicked down the road.
Yeah.
But in that context, it's been a very interesting speech by the Undersecretary of the US Treasury, Jay Shambo, who also said, well, you know, we need to kind of insist a bit more of a separation of work between the World Bank and the IMF again, because what we've heard is there are all these risks out there. There's this growth potential that's not been realized in many countries. There are macro issues that have to be resolved, especially with the debt. And the IMF, as he said, has kind of gotten a little bit too much on the climate side of things. And now we have a World Bank president who is very much focused on it again. So I would expect this to make some waves and lead to some discussions whether there needs to be a clearer separation between the two.
Yeah.
In part because also one has to say, one issue that has not been discussed much is if we raise a lot of money for climate and development purposes, how is it going to spend?
Yeah.
Will it be effectively used, or is it just going to be money that kind of leads to inferior outcomes and then leads to donor fatigue so that the whole thing doesn't work? So there's a role for the IMF here, and I have some of that in my paper, but I'm sure it's going to be a big discussion here in Marrakesh.
Well, Nicole, let me ask you a follow-up on that. Should there be, from your perspective, a more redefining or back to basics, I think is somehow how Shambo's speech is described, of delineation of roles between the IMF and World Bank? Has there been too much blending of the roles? You come at it from the other side of 19th Street. We used to sit on the IMF side, so I think it's useful to hear the bank side.
I certainly don't want to speak, for my colleagues and friends on the bank, but I mean, I do think that the concern about mission creep, so to speak, is real, and I think it comes down to something that Martin just said is, yes, we need to raise the money, we need to have those finances. There can be a delineation of how those monies are used, but I think it's also about getting that concrete, right, and getting that sort of practical and policy. And I think I actually think there is a role for the IMF to play in development and in climate, but I do think there has been that mission creep, and I think if we can use this sort of reform process to bring that in, and at the same time, from the World Bank side, right, we've just talked about how, Ajay and about bringing in finance and new financial models, whereas the World Bank really, can be leaning into the lending side, the advice, the advisory, and the support, and focusing on, who's benefiting, the inclusion of that funding, and how that's working. So, I think there is an argument to be made that there has been that mission creep, really on both sides of 19th Street, maybe a little bit more from our friends at the IMF. But I think in the way that you can't have one without the other. I think we need to walk into government. It's about finding that balance and doing them the right way.
Yeah, as we said yesterday, it'd be more useful to say Bretton Woods institutions, annual meetings, instead of flipping IMF World Bank. Hung, I'm going to come to you and get your response on that, but we only have a few minutes left, and I want to get people thinking about what's coming. Tomorrow morning, World Economic Outlook, the flagship report from the IMF, economic forecast for every economy is coming out. It's what everyone pays attention to, and I want to flag for folks where you think the problems are going to be. What are the problem economies? We're hearing a lot about Egypt. What about Argentina? I mean, largest program that the IMF has right now. What should we be expecting this week on specific countries? Hung, over to you with that easy question.
Argentina is a perennial and persistent problem of the IMF. And whatever happened this time around, we'll be discussing Argentina a year from now and probably a year further from then, because it's really a very difficult situation. The people in the country somehow will not accept any reform, any change in the way they have been doing business for decades, and therefore they are really stuck in this low growth, high debt, high budget deficit, high borrowing from the fund. The fund, however, has really, in my personal view, done a disservice to itself and the international community by over-lending to Argentina. When they forget banking 101, you really should not concentrate your lending to one customer, because if that one customer has problem, you have problem, not him. So I think the IMF committed that cardinal sin of banking 101. But if I may very quickly to my colleagues here, I can be stronger than Nicole, and I say that there has been mission creep in terms of IMF. There can be explanation for that in the previous 4 years, why they creep more into climate change activity. But I think that the IMF should really go back to its roots of really macro analysis, macro growth, sustainable growth, and financial stability, where its core strength is. And the financing is really short-term financing for balance of payment crisis, not extending long-term development lending to countries like the Resilience and Sustainability Trust. In my view, they should really transfer that activity over to the World Bank. They should continue to look at climate change, but more from the point of view of advising government about the risk they have to be prepared to deal with, the policy to mitigate the risk, and so on, but not financing. And the last point is increasing the share of developing countries. It have to be more widespread for emerging market and developing country share, and not just China. In 2011, we had one big quota reform. The China's share of the vote go from 6% to more than 12%, good for China, but at the expenses of Africa losing votes and share, at the expenses of Middle East country losing votes and share. That cannot happen again.
Yeah. So we're almost out of time. I'm getting the signal, but I want to do one final question, going back to the themes that we think about so much at the Geoeconomic Center, the intersection of finance, national security, and foreign policy, and the work we do. So on the plane ride to Marrakesh, everyone's been saying it's been 50 years since the IMF meetings in Africa, so I had the team, we did a little homework. The last meetings were in Kenya in 1973 at the end of September, and I read the speech the president of Kenya gave to welcome the delegates, and the first thing he says is, we are dealing with surging inflation and geopolitical instability that threatens global economic growth. And I have to say, reading that, 50 years later, 10 days after that, the Yom Kippur War broke out, then there was the oil embargo, gas crisis that followed, and so I'd like to hear from each of you, how much does geopolitics, which has not always been front and center at the IMF World Bank annual meetings, feature in these meetings? And I'll go in reverse. Nicole, Hung, Martin.
Great. Well, in answering that, I'm also going to pick up on something my dear colleague Hung said on the mission creep point. And I think it does factor, right? I think it factors in terms of fragmentation, as Martin said, and in other ways. And, to me, picking up on what I, started with and saying is, here we are, post-UNGA, pre-COP, is, I think, arguably, we are seeing the evaporation of the long term, right? And it relates to your, sort of summation question, which is, the geopolitics are coming in, the realities are set upon us. Climate change has become much more of a short-term, medium-term than a long-term question. Some might argue otherwise. So to me, that's that sort of other overarching theme, and I think it relates to what you said is something we raised in the spring meetings that we saw, this balance between short and long-term economic recovery to reconstruction, right? How does it, when we think about Ukraine, when we think about some of these other things that we're going to talk about this week, and I think that's also where the geopolitics comes into play, that is there really a long-term anymore?
Yeah.
And is everything short-term? And that relates also to this idea of, can you really separate the short-term finance from the, quote, long-term?
And the internal dysfunction, to Martin's point, that makes it so hard to address the long-term.
Absolutely.
Hung, over to you.
Yes, conflicts existed 50 years ago. Conflicts exist now. But the big difference is that only now do we see the big rivalry between the two biggest economies in the world, US and China, over many different fronts. The system of the way of doing business, the system of organizing companies, and policy, and so on and so forth. And I think that will influence the relationship between the two countries with other allies to each of those countries, and making any compromise and agreement to reform World Bank, IMF, quota reform, for example, even more difficult to achieve.
Yeah. Thank you. Martin, final word.
So I think we have been, as the United States and its allies have been in a competition with China already for 20 years, sometimes without realizing it, and I mean a geopolitical competition. And I think the West needs to react and make sure that the Bretton Woods institutions are not being hampered in their function, which, because of China's reluctance to engage in debt restructuring, in some cases they already are. So this is not a popular view, but one has to think whether it would be really wise for the US and Europe to grant China a large increase in votes at the IMF at this point.
It's a fair question to ask. Yeah.
Instead, I think the Western world would be well advised to keep the Bretton Woods institutions functioning and well equipped, but also to make sure that the programs that the institutions put out are successful. Otherwise, they lose attractiveness both on governance and on the efficiency. That's a tall order. It will require hands-on hand-holding of the management by the shareholders, and they will also need to become active in helping and sometimes bringing countries to implement the reforms that are needed to get them onto a better path.
Martin, I'm glad you ended there, because I've been thinking about coming into these meetings what the goals are, and to me you hit on that final point. The goals are to prove that this is effective and that this works. It is not do everything this week in Marrakesh, impossible. Yes, to make progress in the long term, as Nicole said, but prove to countries that the programs work, that the transparency works, that the money's dispersed in a way that's understood, that they know what's coming. And that is success from a multilateral perspective, because there are so few multilateral institutions that function, and we need to look at the UN just as an example that has an institution that has often gone into dysfunction. And I don't think the world can afford the IMF and the World Bank to fall into that. I see that as one of the challenges for this week.
You have to keep in mind Martin's point. The IMF continues to function because it remains still a Western-driven institution.
Well, this is where equiproportional comes in. So we started with the word, we'll end with the word. We hope you join us throughout the week. You can find everything on atlanticcouncil.org, all our events, Tuesday, Wednesday, Thursday, Friday. Tomorrow we'll have finance ministers from Angola and Zambia. We'll talk about these debt restructuring issues with Zambia. Later in the week, we'll host finance ministers from Spain and India and a range of countries and different types of economies. So stay with us. Thank you for joining us. We're here in Morocco. And thank you, Nicole, Hung, and Martin. Have a great rest of the day.
Thank you.
Thank you.